we're going to go into a moment where I'm going to share with you a bit about how folks in the investment banking world think about creating wealth so that you could get a sense of how you basically want to also plan your life. Now, I've been using the word net worth a lot. It's nothing but what you own and what you owe. In the end, you want to get to a point where what you own are earning assets, meaning that there's no point building 3 homes in Ghana so you can be a house owner. What it is if you're going to own anything, you want to get to a point where they are all earning assets, meaning that they have recurring revenue that they're bringing to you. And liabilities, you want to get to a point where you're basically using other people's money efficiently. So that's where you basically want to get to. If you can't use other people's money efficiently, so that's it. If you do that, then the whole idea is basically to maximize this. There are several different assets that you can sort of use to basically increase this and minimize this. Okay, let me do this. So one of the things that I want to share with you this afternoon that's very critical is basically how you think about your finance, the financial world, assets, and all these stuff. Everyone knows there's something called interest rates. So interest rate is just basically simple return on assets that are out there. But one of the things that I want you to think about is this. If this is today and this is, say, 30 years from now, and this is 20 years, this is 10 years. Interest rate, when you borrow money from a bank in Ghana, they will charge you a certain interest rate. When you buy something, your currencies, whatever you have, if you have a home in Ghana, guess what? That home, because it's sitting there as an asset, is also depreciating at a certain rate. So if you borrow money to buy it, then you have to make sure that sometime in future, if you want to sell it, you're able to sell it above the amount that you borrowed it and then cover all your depreciation and whatnot. But this interest rate, I want you to think about it. This is how in the world of investment banking, we think about it and we use it to sort of invest in stuff, right? So there's the basic rate that is based on, in a sense, what I'll call the government curve. If I take Ghana government and all the treasuries and the bonds and stuff that they've issued, or any country, if I take US government, it will be the same thing. This will be basically the government curve. And this government curve here is a certain interest rate. So in Ghana right now, it'll be like 17%, starting with 15%. In the US right now, it'll be like about 0.5%. By looking into the future, you have this curve. And that curve is something that you have to pay attention to, and you actually have to understand. To be financial literate, you have to really be able to understand how this curve is moving around over time. And we'll get into some of the ways to look at it. On top of this curve, you have another curve here that is called the credit curve. So this credit curve here comes in different levels. If you think about it, this is where government funds itself. This level here is where companies fund themselves. And then you have another level here where basically, let me just call it the default curve. So default curve is where different financial products that people are trying to use to make money ends up being. Now, in the world of investment banking, knowing how these move around then allows you to select which assets to actually put your money into today, which sectors to put your money into today, which companies to bet on and whatnot. And we're going to go into some graphs so that I can give you a more literate about the world of finance and how you think about what happens with your money and how you actually begin to build some capital. So here, let's take a look at it. People are willing to take risk to really get the return and be able to build what they are passionate about. So think about this. Since 1996 to now, 2020, this is literally how the world has been. So a lot of folks have not really taken time to think about, but there have been a lot of dislocations in the world that often at times when we look at it, we think, oh, okay, this is news, it's happening in the US, it's happening in Europe. But you know what? Every time these dislocations happen, guess what? There's incredible period where people are building wealth. And the question is, are you going to participate in it or are you not going to participate in it? Because those cycles is what had created the pyramid of wealth that I showed you at the beginning. 1999, there was a crash, then it comes down. 2002, it goes up again, and then we had another crash, and it comes down. And then we have the 2009 financial crisis, and then now we've gone up, and it's like the longest time we've gone up. until we got here where basically the world got hit with pandemic. So people who actually are building the biggest wealth and really moving up, they know the surroundings, what happened. And every crisis becomes an opportunity to reorganize their life and do something that basically always propels them up. So look at this graph here. You would think it's just a US specific event, but guess what? Each of them has driven the world. Why? Because the dollar drives the world. Ghana city right now looks very stable. If you're sitting in Ghana, you think, okay, oh wow, city in Ghana is quite stable. The government has done well. It hasn't moved around, and now it looks like it's strengthening. Well, guess what? It's doing that because the dollar itself has not done anything. So the moment the dollar does something, you like it or not, the city is going to go one way or the other. That is the world we live in. And guess what? Whatever global crisis happened, that is why people are sharing around now saying that the wealth of billionaires have increased about 3.7 trillion. And how come it was a pandemic and everybody else has lost jobs? And well, guess what? Because the guys at the top have incredible earning assets that are always sitting there, and they are very much aware of this whole concept where whenever there is dislocation, disruptions, that's the time that they also make money. Crisis in 1999, collapse of the tech bubble. We all remember there was Yahoo Finance and everything, and they all collapsed. And then the global crisis. So every crisis, the market had gone up and up and up and up. But what it is even more. Every crisis, individuals that are very financially aware and astute have been able to discover a way to basically increase their worth. Okay, now, the thing that I want you guys to be very much aware is this: the 10-year treasury yields. So the US, because it dominates the world so much, the 10-year treasury yields for the US actually drives a lot of things in this world. And if you're going to be in Ghana and basically build wealth, one of the things that I'll first say is this: number one, find a way to have exposure to the US dollar itself and reduce your exposure in Ghana currency, meaning that if you're actually being paid in cedis, then begin to put in place a way where you begin to actually do some of your savings outside of cedi. And then pay attention to basically this US 10-year treasury. That's very, very easy. Every time you go on Yahoo Finance or Bloomberg or whatever, you will see what is being done and how people are talking about it. For example, this 10-year yield, think about this. This is gold prices. If you're sitting in Ghana, you've seen gold prices go up. So you're like, oh, wow, gold prices are up, man. We should all get into gold and we should all get in gold. Well, gold prices are up just because the 10-year yield is down. Why is the 10-year yield down? Well, because every time there is a crisis or there is some kind of disruption, folks move to the 10-year yield and folks move to gold. That's the simple reason. Gold is not driven by supply and demand. So, for example, if you were sitting in Ghana and you actually had put your money in gold, let's say at this point, you would have lost it because the 10-year would have come up. Now in the US, everyone is talking about this and when it's going to come up. The moment this starts coming up, this is going to go down. So if you're someone who goes and put your money in gold right now, guess what? If the 10-year yield comes out, you're going to lose money. So this is sort of being a bit financially literate.